There's a lot of discussion today about the oversupply of LNG markets. Historically, LNG markets have always been either oversupplied or undersupplied. It goes to the difference between liquefaction projects, which take 5 to 7 years to develop, and local market demand, which moves every year with economic cycles. However, today's market is much, much bigger than in the past. There are far more exporting countries and liquefaction projects and far more importing countries than there ever have been before, and we expect this phenomenal growth to continue. Today's oversupply reflects lower prices primarily because of conditions in Asia and to a lesser extent in Europe, but those conditions won't remain that way forever. Two primary effects, some of which are bad for the short term and good in the long run. Low prices are encouraging a lot of countries to switch from fuel and coal-based power to LNG. The sheer availability of the product and the liquidity in the market encourages people that LNG will be a reliable product, that it'll be around, there'll be enough of it. The second is that these prices have convinced large suppliers, large integrated companies that produce LNG, that they need to take a larger interest in downstream markets. They need to grow their own customers. That hasn't been the case in the past, where they've typically just sold into the market or sold into large importing countries like Japan. But there's a much larger interest into going into places like Southeast Asia, Africa, South America, and developing projects that would consume the LNG and thus develop the market. In the past, the projects were just large-scale imports. There was a large gas monopoly in a country, build a large project, imports large quantities. Today, these LNG to power projects, which are the primary driver, and to some extent small-scale LNG, are much more complicated projects. You have to take account of local factors such as local pricing, credit differences with these new markets, local regulations. You have to look at the seasonality of the market, how load balancing is worked. So there are a lot more considerations, but the LNG market for supply hasn't changed much. It runs along LNG market standards. And so the real trick is combining all of these local characteristics with the characteristics of the LNG market that allow long-term supplies to come to these local markets. These are much more complicated projects and in some ways much more interesting projects.